adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
What if we told you you could access all the information you needed?
All right, coming up, this is Bloomberg Markets. Matt Miller, Paul Sweeney. We are live here in the Bloomberg Interactive Brokers studio. Coming up, we're going to get a look, Matt. I think there may be a strike tonight. It's kind of what the reporting is. We're hearing that reporting coming out of Detroit.
I mean, hugely important day. It seems like the UAW, the Auto Workers Union, and the big three, General Motors, Ford, and Stellantis, are still pretty far apart. Yep. And they've got to come to an agreement by 11:59. We already heard from the union president on a Facebook Live posting yesterday that they're getting ready for partial strikes. Who goes on Facebook Live?
I don't know.
Like my grandmother? Who's on Facebook?
I don't know. But we'll get that. We're going to get all that reporting coming out of Detroit. We're going to get a look at some of the eco data that came out today, and we're going to get some outlooks for this market. That's all coming up in the next 3 hours. But first, we kick it off with the John Tucker.
All right, thanks, guys. Equities, they're climbing today. ARM Holdings, that's going to debut on public markets in the U.S. Also had the reports on producer prices, retail sales. It's kind of left intact the Wall Street expectation that the Fed may hold interest rates steady next week. We saw an across-the-board beat for August retail sales data this morning. And for John Riding, the chief economic advisor at Breen Capital, this does highlight the resilience of the U.S. consumer.
The U.S. consumer is strong. It's not that the U.S. is roaring, it isn't, but it isn't yet falling into recession given the size of the interest rate adjustment.
We have 10 of the 11 major industry groups in the S&P 500. They are higher. Energy in the lead as WTI hovers around $90 a barrel. Consumer discretionary, the biggest drag. That's where you're going to find shares of Amazon.com down just about 0.9%. Again, waiting for the start of trading at ARM. It was priced at $51 a share. S&P 500 right now, 20 points higher. That's up 0.4%. 44.86 on the index. The Dow Jones Industrial Average up 199 points, up 0.6%. The NASDAQ 100 is 17 points higher. That's up about 0.8%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, Yeah, that is your Bloomberg Business Flash. Matt and Paul.
All right, very good. John Tucker, we appreciate that.
Why is Matt staring at me?
I'm just... I
Yes.
mean, you're such an attractive man, for one thing. You have so much experience and wisdom for another.
Exactly.
You know?
And he's wearing a sport jacket, which is nice. Seeing on the Bloomberg terminal, ARM eligible for trading around 10:20 a.m. Eastern time. If I had to guess personally,
Eligible?
I would say 11 a.m.
I would say 1 p.m.
No, they got to get it done. They like to get it done around 11. It's been
They
my
like to, but they haven't been lately.
Yeah, we'll see. This is a big one, and they want to make sure this one goes off well. All right, Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Broker Studio, streaming live on YouTube. So head on over to youtube.com and search Bloomberg Radio. Again, as John Tucker was just reporting, markets a little bit higher here today. That's nice to see. Let's see where the action is underneath the hood. We do that with a Bloomberg Equities reporter, Alexander Semenova, who joins us live here in our Bloomberg Interactive Broker Studio. Alex, what are you looking at?
Guys, great to be here with you as always. As you had mentioned, all eyes today are on ARM Holdings, the SoftBank-owned chip designer. It's set to make its highly anticipated public trading debut today. ARM's IPO could also be a catalyst for IPOs from dozens of tech startups who have been waiting as the IPO market has had its longest listing trough since the global financial crisis. As you mentioned, it is expected to start trading around 10:20 a.m., although some sources tell my ECM colleagues on the equities team that it could be around 11 a.m. ARM had priced the IPO at $51 per share, valuing the company at over $54 billion. That was the higher end of the price range. However, what's interesting is that yesterday at the final price setting meeting, some bankers and executives had floated, moving it up to $52 per share. As of course you guys remember, the offering was oversubscribed more than 10 times, meaning investor interest had far exceeded supply at that price range, so they made the case for $52. But SoftBank founder Masa Son apparently came into that meeting and said, let's keep it at $51, opting to be more conservative. He apparently said that risking a healthy debut wasn't worth the $100 million or so in additional proceeds.
He just bought a 25% stake in this from his own fund for far more.
Yeah, I guess, you know.
This is a guy who just, burning money does not hurt him.
No.
You know? No. As he's proven, I think they had a $30 billion loss last year?
Yeah.
Carnival.
Carnival.
Let's go to, yes, we're all watching ARM. Let's talk about Carnival, because a big gain in pre-market trading and Norwegian Cruise Lines as well. What's going on there?
Yeah, Carnival and Norwegian shares up more than 4% last time I glanced. That's after Redburn Atlantic lifted both stocks to buy from neutral. I actually never heard of that firm.
No, Redburn Atlantic.
But apparently,
based in London,
investors were very happy with that. They said that the cruise line sector has now, quote, exited intensive care. Analyst Alex Brignall wrote that factors that made him positive pre-pandemic, like growth prospects and margin opportunity, are even stronger now. He also cited that debt is falling and profitability is improving, which makes the fundamental case.
We had the CEO of Viking Cruise, which is primarily a European cruise lines. They do ocean cruising, river cruising, all that kind of stuff. We had the founder and CEO on a couple of days ago. They're taking bookings into 2025 now. They're pretty much booked through 2024. So, I mean, the demand side seems like in that industry, as you would expect, I guess.
Definitely. I mean, well, it's a little bit of different of a different business, right? Because Viking and Lindblad, these are kind of high-end river cruise, kind of snooty expeditions.
I'm the demo.
You are their demo, as opposed to
like Alex. Alex is not going on a Viking cruise.
Alex is more likely, she's going to hit the Bahamas. All you
Young,
can drink.
hip crowd.
You guys know me too well.
Exactly. All right, Visa is down. What's going on with that company?
Yeah, not a great day for Visa today as it moves to let some of the biggest U.S. banks eventually sell their shares. Visa's proposal will allow holders of its Class B shares, that includes banks including JP Morgan Chase, Citigroup, Bank of America, to sell as much as half of their stakes. That's $96 billion worth. Their ownership was part of a share structure implemented before Visa's IPO in 2008. The company was previously owned by these banks, and at that point, the structure was so that they'd be on the hook to cover the costs of longstanding litigation they had with some merchants. Various analyst reactions here. Morgan Stanley said that the exchange reduces the overhang from wondering how this would eventually be converted. Jefferies said that they do expect a modest overhang from the forthcoming sale pressure.
Yeah, so I don't know. You think about fintech, and I talk to a lot of fintech analysts, or whenever I do talk to fintech analysts, they say you can buy a lot of these new names, but you know what? Just go buy Visa. Go buy MasterCard. I mean, those are the systems upon which a lot of this new technology is going to ride on. And if you want to play just broader fintech themes, go buy Visa.
That's definitely what Visa and MasterCard will tell you.
That's what exactly what they'll tell you. But it makes sense.
They both had incredible runs since that IPO.
All right. Good stuff here. Appreciate it. Alexander Semenova, thank you so much
Thank you, guys.
with that overview of what's happening in the marketplace right here. Matt, again, you're the car guy. How concerned are you about this strike?
I'm hugely concerned about it, and not just because of the car I'm waiting for,
which
is
pointed
out,
Dodge
it's being
Challenger.
built in Canada. It's the Dodge Challenger RT Scat Pack wide body. I've been waiting quite a long time, but really, you're going to see a lot of people in a similar situation, waiting for cars, and not just consumers, dealers, right? That don't have a lot on their lots already.
But we just heard that they actually do now. We heard from Alex Naughton covering
Keith Naughton.
Keith Naughton, thank you, Keith Naughton. Yeah.
Okay, so
but let's
maybe they have a few weeks of inventory left on their lots, because if these strikes are widespread, and again they're going to be targeted at first, it's going to be a problem for dealers for sure, and then for prices and for inflation and for the economy.
This is something that is a Detroit issue. It is a Washington D.C. issue. That's why we got a nice roundtable here, Matt. David Welch, Detroit bureau chief for Bloomberg News, and Jordan Fabian, White House reporter for Bloomberg News. They join us. We're going to roundtable this thing a little bit. So, David, I want to get the latest reporting out of Detroit. What's the expectation? Will there be a strike? And if so, is there any expectation of how long it may last?
I think there certainly will be. All of the vibe coming out of the union right now is the president is itching to strike. He says he's not, but he's making plans. The rhetoric is still really strong against the car companies, against rich executives, all of that stuff. So he's getting people riled up. He says they're far apart. It doesn't sound like they are if you look at the numbers. So I think they will. And look, it could go on for a while. I don't think it'll be something like 3 months, but I could see strike going on for weeks, and it could vary by car company too. It doesn't necessarily. It could be 2 days at one and 3 weeks at another, right? I mean, if he gets the deal he wants from specific companies.
So, David, how far apart are they? Because I've read now that the union has lowered its demand for pay increases slightly, and the last I saw from automakers was about double what I had seen a week ago. So, how far apart are they right now?
Yeah, so look, Ford is up to 20% and GM is at 18% pay raises over 4 years, which is, I think, better than they've ever gotten. So, I think, and it's not the 36% they asked for, but I think that was sort of a highball offer from the union to begin with.
But they asked for that because the chief executives have gotten those kinds of pay increases over the past 4 years as well, haven't they?
That's right. And look, CEOs got to kind of be careful what they wish for, right? Because, suddenly they might have a union saying, you got 40%, and why didn't I? And the union didn't get great raises over the last contract. And I'm sure some labor negotiators at the companies got bonuses for negotiating a pretty low-cost contract last time. And they should be careful what they wish for, because now they've got an extremely angry union but they do. And with a president who wants to make a statement about labor's role in America. This isn't just about this contract with him. He wants to bring the labor movement back to prominence in America.
All right. All right, so
that's where we are.
Yep. Jordan Fabian, let's bring you in. You cover the White House for Bloomberg News in Washington, D.C. The President Biden, he has said twice that there won't be a strike here. What are you hearing out of the White House?
I think that's the president being his usual optimistic self. Other people I've talked to aren't so optimistic, and they see what we're all seeing, which is a union and management still apart on a contract, and they have encourage the sides to stay at the table. But some people I've talked to have said, look, we don't know how this is going to end. It's all we can do is kind of encourage them to keep talking, but there's really not much we can do to force them to get a contract. So they're crossing their fingers and hoping there's not a strike, and if there is, it's not a long one.
Jordan, David points out that this president wants to bring unions back to prominence. At the same time, he has backed up truckloads of subsidies and dumped them on the automakers' doorsteps to try and encourage them to build more electric vehicles, for which, by the way, we don't even know how much demand there is. That is going to require far fewer workers. So is he working at cross purposes?
This is the central dilemma for Joe Biden. Is this clean energy transition is one of his biggest domestic priorities. But guess what? So is empowering the U.S. labor movement. And in this negotiation, he's found himself caught in the middle of those two priorities, and there are really no easy answers. The administration has done something recently. They've released this $15 billion tranche of money from the Energy Department to incentivize factory retooling, and they've put some strings attached there. They're encouraging car companies to use that money on unionized plants and make sure the benefits go to union workers, but they're not forced to. And this has been the bane for Sean Fain, which is he doesn't think the administration imposed enough conditions on all this money that's going to the car company.